Hey everybody, Boris, let's speak at Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar for SEP 2nd to SEP 6, 2019. We do have a little bit of a shortened week this week because September 2nd, Monday, is going to be a holiday in the US and North America is going to be very quiet. But as the week progresses, certainly going to be a big, heavy week as far as event risk goes. And the front and center question is just how much more power does the dollar have to go forward? It's really going to be very contingent on data. This is going to be actually the first time in a long time that I can remember where data is going to have an impact because we are in a kind of a detente situation as far as geopolitics goes because they're obviously going to be start talking about trade between China and the US. Assuming there's no more further negative tweets or rhetoric coming out of DC or Beijing, the political situation gets put to the back burner and the market starts to look at just how strong or weak the US data is relative to where the Fed is going to have to be in September. It's really going to be a question of whether the Fed is going to be forced to do a 50 basis point rate cut or whether they can sustain just a 25 basis point cut. That's going to be positive dollar and, of course, positive U.S. rates. The big story as we closed up the week was the drop in the euro. We took out the 110, which was a huge support level. And we'll take a look at the longer term charts here because euro is really approaching what I call the Macron win fill, the Macron gap, which was, I think, what was it, 2015, 2016? No, sorry, 2017, when he won the runoff election. That put a huge rally into the euro. It's been a runaway gap, has not been filled for a couple of years, and now it's almost preordained that that gap is going to be filled as the euro continues to go down. The critical story in the eurozone is that the policymakers, both on the monetary side and on the fiscal side, simply refuse to accept the fact that the whole region is actually in a recession already. They are sort of communicating to the world that they're going to do something only if there's a recessionary evidence. But I think they're way behind the eight ball. The market is certainly seeing it. That's why you're seeing so much negative rates out of euro. And the euro really had a massive sentiment fallout today that I think is going to have some continuation as we go forward. Dollar yen, on the other hand, very contained for now. We did make a very clean double bottom. We'll talk about that when we look at the charts. Support stays at 106, resistance at 107. Cable, same kind of a thing. It's a standstill until we try to figure out what happens in the Brexit story. For now, the assumption is something positive gets done on the Brexit story, and 120 holds. That's sort of the shortcut to how you read the cable story as we go forward. Now, the calendar is very busy this week for the majors. On the European side, not so much. We have just final market Eurozone PMI. We have the European PPI data, which immaterial in every sense of the word. But on the U.S. side, there's quite a lot of stuff here. We have the ISM manufacturing, which is going to really be important, not necessarily in and of itself, but whether it can just hold the 50 level. If it can hold the 50 level, it's still, remember, manufacturing in the U.S. has really been declining rapidly. As long as it can hold the 50 level, it means we're still in an expansionary mode, and that's positive for the dollar going forward. On the European side, we get retail sales on Wednesday, and then all throughout of this, we get the UK data as well. Again, UK data is going to be secondary. Perhaps it will have minor impact if it drops below, especially if services drops below 50, because it may raise angst about the oncoming impact of no-deal Brexit. In fact, it could be perverse in a sense that if you get negative reads on all the UK PMI components, it might make the UK negotiation more open to some compromise. On the other hand, if these are relatively strong reads, this could actually sabotage the negotiations, as they'll be arrogant enough to think that they can just spin out without a deal. The economy will sustain itself. So it's kind of almost a reverse mindset here that you need to watch out for. But regardless, I don't think it's going to have much of an impact as far as data set goes. It's all going to be Brexit headlines as we go forward. Beige book on the U.S. side, again, nothing major. Finally, the really big event, of course, will be, well, first of all, Thursday we'll have the ISM non-manufacturing. That always gives us a very good read on where the employment number is, because the employment component of ISM non-manufacturing is probably the best forecaster, along with ADP, of exactly where the employment is. But employment itself, barring some horrid fall off, which is unlikely because we've just basically been steady as she go to around 150, is really not the story. It's always the story is wages. Wages have been significantly disappointing in my opinion. Today we had wages coming out on the Friday, sort of the personal income numbers, and they were very, very weak. Basically, what's happening in the U.S. consumer is that the U.S. consumer is spending healthily by expanding credit, not by getting higher wages, and that will be the key thing here because if we can't get wage growth, it really forces the Fed to kind of cut even further to expand credit. That's really the negative feedback loop that we're going to be facing here on the U.S. side. So this number is going to be much more important than anything else that we look at as we go into Friday. Now let's look at Euro. So Euro, I think, is worth looking on the weekly chart here because this is what I'm talking about as far as the Macron gap, right? So where is the Macron gap? I think I have to go down even. There. No, I'm sorry. It's here. It is. Sorry. This is the weekly chart. So the Macron gap around the 17. That's 2017. That's what I was talking about. This is the runaway gap when Macron won the French runoff. Euro then ran all the way up to 120, came back down, and this is the first time where we are coming down to these levels. It's the gap was basically 107 to like 109, and it really feels like it's going to fill. I mean, this, if you look at the weeklies here, let's look at this thing on a more. The weekly took out all the lows of the last 4 weeks. We ended up pretty much on the lows of the weekly candle. Just a very, very ugly candle in 1,000 different ways. So I think we have continuation to the downside. At very minimum, 109.50 gets tested. But certainly, if we don't get any positive noises out of the Eurozone on some stimulatory action, it's likely the market is just going to just drive this all the way down. Now, once they took out the 110s, there's just a floodgate of negative sentiment behind it that I think is going to drive it even further to the downside. Pound, on the other hand, this is the weekly. You can see it on the same thing as the dailies. The 120 really, really holds very well. One thing I kind of wanted to look at, people were telling me that I should look at the monthlies. And so Doji on the monthly, that's a interesting sort of a subtle little signal here. Not really extraordinarily powerful, but definitely showing you that the 120 get tested and held. That's really all it's showing you at this point. If we look at the dailies on the pound, the short-term story in the dailies here is that we're holding above the 20 SMA, but barely. This is really, as I said, a pure Brexit headline story. We get some kind of movement and some kind of agreement on the Northern Irish border. This thing skyrockets right through the 23s, and more importantly, I think once it kind of breaks the 23s, that's the tug of war in the market right now as to whether the deal gets done. I think once it goes through 23s, the assumption is the deal gets done. We get a very, very positive formation structurally, and it opens up the run all the way up to 24, 25, 26. Remember, cable is grossly oversold on assumptions of a no-deal Brexit, and anything that changes that reality puts probably 5 pennies into the trade, simply because the economy is not that horrible, and once the deal is done, huge amount of investment risk, huge amount of capital risk, huge amount of business risk goes away. So positive news, yes, we get up there. Negative news, it comes back down to testing this 120 level. And of course, horrible news where it's guaranteed negative no deal spin out. We're definitely going to break the 120, and it takes us all the way through the 119s, 18s in cable. For now, though, it's really going to be back and forth. There's nothing definitive until really middle of October. We may even just be sort of in a pause because both major parties are in a party conference coming up. So we'll see where things go. Clearly, there's going to be some behind-the-scenes negotiations, but for now, I think the price action may be actually more muted than we think it will be. Yen, on the other hand, this is interesting. So yen, I think, kind of a tale of two cities here. Did we make a bottom? Absolutely. This was a massive, massive turnaround candle. Is this the operating candle from which you go for? Absolutely. This is basically what I mean by operating candle is that the bias from this candle, emanating from this candle, is positive. And really, it remains positive until and unless the candle breaks to the downside, which is a massive amount of risk, I understand. But I just generally think that if whatever moves we have to the downside are corrective in nature for now, they're not essentially a continuation of this downside trend. This was a massive reversal candle. And again, the reversal candle was basically based upon the idea that the Chinese don't necessarily want to escalate trade war into a full-on war. So long as that reality holds, we probably hold at these levels. More importantly, if the U.S. data comes in complementary, there's every chance that we could run the 107s here. And once we get through the 107s, it really creates a much more positive structure. And then, of course, you can get sort of a positive feedback loop, because now the whole U.S. going into a recession, Fed has got to cut by to zero, and the world is coming to an end story goes away. And we start to consolidate around the 106, 107 for ultimately a long run into the 109s, 110s end of the year. That's the uber bullish scenario. We've got to let the charts tell the story. For now, the bias is to the upside. You hold support against this very large number, but in the meantime, the very short support is around the 106s. That's how the trade shapes up. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.